Hello there, welcome to this edition of Global Business Africa. In the next 30 minutes, we'll have a comprehensive run through all the key business stories you need to know about from all corners of the African continent. Cairo, Johannesburg, Lagos and Nairobi. We've got you covered. Here's what's coming up. Concerned Ghanaian authorities are acting to stem a long-running economic slide. Elsewhere, President Abdel Fattah el-Sisi's 100 days in office are in question. What has he done? What more does he need to do? And we'll be looking at the business of diving for algae in Morocco. Divers are pleading for better returns in this lucrative trade. Let us start with Ghana tonight. The West African country plans to hold talks with the International Monetary Fund in a matter of days to fix several economic challenges. The cedi has fallen by about 40% against the American dollar. Inflation was at 15.3% in July. In the same month, the government revised the forecast budget deficit higher to 8.8% of GDP in this fiscal year. The challenges, therefore, are clear. But what should you expect from the talks? Here's Katerina Vitozzi with some answers.
A rush to get a recovery plan into action. Since January, the Ghanaian cedi has lost nearly a third of its value against the dollar. That seriously hurt the economy, making imported goods more expensive for consumers and businesses, as well as making investors nervous. For help, the Ghanaian government has turned to the International Monetary Fund. It'll be discussing a recovery plan with an IMF team from Washington here in Accra next week. It's hope it'll be a first step towards getting Ghana's books more balanced and getting its currency back on track. Back in July, residents took to the streets, angry at the rising cost of living. They wanted the government to address the issues that were making daily life more expensive. But many believed calling on international help was only worth it if the Ghanaian government was truly committed to change.
What's the role of the International Monetary Fund? They will come and tell them what is right. And if they don't do the right thing, they won't get the support. I mean, it's simple.
You know, international, they observe us. And when the way they see, when they give us donation and everything and misuse it, they won't be encouraged to come and help. You see, when you are giving the money to do the job, you have to do the job well. Not doing it or do it well.
But Zambia is a good example of how even reaching out to the IMF can reassure investors. In June, the struggling East African country asked the IMF to help design a rescue program. The move comforted investors and aided a much-needed rally in the Zambian currency. Katerina Vitozzi, CCTV, Accra.
And we'll certainly be keeping tabs on Ghana's story a little later on in the course of this bulletin. However, let's get back to TwinPine. It's a leading mobile advertising network and it's launched operations in Kenya as it expands its footprint in the continent. The firm has operations in Nigeria, South Africa, Ghana, Uganda, Zimbabwe and Zambia, among other countries, reaching millions on mobile devices. The firm works with several leading ad agencies, brands and publishers. While launching the Kenyan operation, founder and CEO Elo Ume emphasized the role of innovation and creativity in the business world, arguing that the continent was going through a revolution and businesses are seeking more efficient ways of getting to their clients. Now, the mobile ad space is a fairly interesting place, but also a bit hard to understand if you're not exactly inside it. Let's introduce you to our guide in that sector today. Thomas Malu is TwinPine's regional manager for East Africa, is with me in studio. Thank you for your time.
Thank you, Roman.
Let's go back to something you said in July. Mobile ads are quicker, faster, more reliable way of reaching millions of people at the click of a button.
Yes.
If you were to support this argument with empirical data, what would it be?
Well, I can start by saying that mobile is the closest you'll ever get to your consumers, to your customers. And especially in East Africa, what we have seen is that according to the Communications Commission of Kenya, is that we have now 31.3 million Kenyans who have a mobile phone. And now what that signifies is that the last time I checked our population, we were 40 million. So out of the 40 million, 31.3 million are online. And out of that figure, 21.2 million are actually active internet users. So 90 90% of their internet experiences is experienced through the mobile phone. So it's providing this platform that is closest to your consumer, and it's the easiest way for brands and marketers to engage them at a very personal level.
Right, but at the end of the day, at least with regard to East Africa, because that's the data for which we have here, print, TV, radio still take up the lion's share
Yes.
of total ad spending. What is it about mobile ad spend or digital spending that clients and corporates still don't quite get and are not willing to put money into?
Well, it's a similar trend actually worldwide, where they are still shying off from mobile, and it's more of a need-to-know basis where they don't understand it fully and what kind of opportunities it has to offer. And now what we are trying to bring into the market is actually a threefold approach, where we want to showcase engagement, provide education, and also show the empowerment with publishers such as Nation, Standard, Gafla, and Capital FM in how they can be able to monetize their platforms using the mobile. Half of these publishers currently are showing their traffic coming through the mobile platform. So 50% of Nation, of Standard, their audiences are actually on the mobile platform. So it begs the fact that we need to start engaging this audience.
Would it be perhaps the fact that they also don't understand how to measure it? Because, I mean, with traditional ads, like if I, say, put out a 30-second TV ad in a campaign over 2 weeks, I know I can calculate the return on my investment using CPMs. But for a lot of people, when you start talking about things like click-through rates, guys float. Is that part of the problem?
It is part of the problem, and yet it is the solution, because in as much as mobile is not well understood, it is actually the most measurable ROI you can have. It is, and again, it is the cheapest. It is cheaper and gives you more.
On a CPM basis?
On a CPM, we are different models depending on whatever campaign that you're running. Some campaigns even have now CPI, cost per impression, and now you have also CPL, cost per lead. So for example, you have a campaign where the brand is telling you, we want you to get guys to come and attend our conference. So that's a cost per lead basis. So we will not charge you based on how many impressions of your banner people see.
We'll charge you on how many people
on how many leads we get to attend that particular conference.
All right, let's look at another argument that usually comes in with mobile activity, because usually we're like some of the people who are watching this program will be watching what we're talking about, but tweeting about it or saying something about it on Facebook. To what extent does that second screen activity drive mobile traffic and mobile advertising?
Well, dual screening is, let me give you a case in point in Kenya. What happened in the 2013 presidential debate? I think Kenya broke the Twitter record in terms of how people were engaging using the phone as a second screen. So dual screening will actually bring a new sense of engagement by offering mobile as a supportive medium. We're not telling you to cancel your TV ad spend. We're not telling you to cancel your radio. That's still very strong, especially in Africa, especially radio. But how many times have you had a radio show where you're being told to click on to dial a number or to send this to SMS to this number? So with mobile ads, something even TwinPen has been working on. When you see a banner on, let's say, Nation website, when you click on it, you don't have to, if the banner is saying click here to send a text to 8505, for example. When you click on that banner, you're taken straight to the mobile SMS interface. So already that number is preloaded, and the answer to that question is already there. The only thing you do is click on send. So that's why we're saying we can do it in a click of a button. So that kind of change is happening, and we're not telling you to stop doing the TV ads, though, which is a fight I always have with
clients.
Traditional guys. Let me call them traditional guys for now. We're not telling you to stop that. Though globally we are seeing a rapid decline in even print sales for newspapers, for radio spend, and it's because they have noticed the eyeballs have moved to the mobile platform. So we're seeking of ways in engaging this rapidly moving audience, which again, if you look at Africa, we are 1 billion. 70% of the 1 billion is below 25 years old.
And most of those guys are used to getting content right here.
Right here at their fingertips. So how do we engage with them? So that's what TwinPen seeks to do with talking with publishers and marketers, in enabling them to understand that your audience is shifting and shifting rapidly.
Right. One final question to you. Facebook. Setting up shop in Africa next year. That's a 800-pound gorilla in the room, sort of. How will that affect your business?
Now, what we are doing in terms of mobile advertising in Africa, let me just give you a clean example. We have CCTV Africa. Yeah, there's a global CCTV 9, Channel 9, I think, which is worldwide. So we believe that Africa-tailored solutions are very necessary in terms of we have a very diverse audience. Africa is not a country; it's a 54-nation powerhouse. So we cannot say what Facebook will do. We cannot say what Google will do. Though globally, Google and Facebook do have the lion's share of all this. So we believe the kind of innovations we have, the kind of banner ads that we are doing, will speak to our audience in the best possible way that Facebook and the Googles and the InMobis will not be able to speak with them.
All right, tough talk. Let's see how you do in the next 1 year or so.
Thank you very much.
All
No
right,
problem.
Thomas Malu, Twin Pines Regional Manager there for East Africa, with us in studio. Thank you so much for your time this evening.
Thank you so much.
Let's move on to North Africa, shall we? The country, of course, is launching a campaign to woo foreign investors back into Tunisia. It's looking to restore its battered economy. A popular uprising forced the long-term president, Zine El Abidine Ben Ali, out of office in 2011. The country's democratic transition ends after elections later this year. But the economy, in the meantime, is facing some fairly serious challenges. Unemployment is high, growth is low, food inflation has made living conditions rather difficult. As part of efforts to fix these problems, Tunisia has unveiled 22 major projects worth about $6.5 billion. They include the construction of a deep-water port in Enfida and a dam in the northwest of the country. Representatives from 30 states, international institutions and private companies are also urged to invest in projects in the energy, transport and tourism sectors.
First, we must remember that it's extraordinary what we have seen in Tunisia until now. 3.5 years later after the revolution, it still stands. We don't have an economy that has completely fallen by the wayside. We still have a country that is in the midst of a political transition. Now what to do is to go to the transition or economic revolution.
You know that people believe in Tunisia, and I think we need to follow up on this conference next year. Any government that will take office has no choice. The only way to succeed is to find solutions to the economic problems, to save this country's economy through work.
The economic and political future of Tunisia is fast bound to the choices and actions, the commitments of the government and the political, social and associative forces of Tunisia. But it is also linked to the creation, one day, of a Mediterranean common market.
Quick run through the equity markets here for you. Fairly mixed performance across the board. Marginal gains in South Africa, of course, after losses on Monday. Interesting story in the currency. We'll get back to that a little later on in the bulletin. Gains, however, elsewhere across the continent, in East Africa, and of course declines in Egypt and Nigeria. He's been in office for about 100 days now. What has he done? What more does he need to do? We'll be live in Cairo examining Abdel Fattah el-Sisi's record. And later on, Nigerian importers are getting a desired boost from Brazil. We'll tell you what that is when we come back. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
We do know that the strike isn't anywhere near close to coming to an end either. That means that those workers are going to sink even further into poverty. "15 minutes into the hour, you're still watching Global Business Africa.
Let's move on to Egypt. The President Abdel Fattah el-Sisi is marking his first 100 days in office. Currently, he's in charge of a country that has endured 3 years of political and economic turmoil, which has cut GDP growth and slowed some sectors like tourism to a virtual coma. On What's Hot tonight, Yasser Hakim reviews Mr. el-Sisi's economic plans, his achievements so far, and how Egyptian taxpayers have responded to his policies.
Abdel Fattah el-Sisi made his intentions on the economy clear immediately after being sworn in. His first decision was to reject the state budget. He slashed major spending items, especially subsidies on fuel and energy. He also added 4 new taxes: real estate, VAT, capital gains tax, and 5% extra tax on the rich. The target is to reduce deficit from 13% to 10% in 1 year.
He reduced expenditure, saved money and increased revenues. The pouring of Gulf money, nearly $15 billion, gave him enough support to go ahead with his plans.
Meanwhile, a number of mega projects were launched to stimulate the economy. The largest is the new Suez Canal project. These projects need funding that the government doesn't have. A Long Live Egypt fund was established, collecting about $5 billion in donations so far. The Suez Canal certificates were also issued for Egyptians only last week. They garnered about $3.5 billion in just 3 days.
Egypt is way behind and we need billions of dollars to revitalize the economy. This mega project will create hundreds of thousands of jobs. Many businesses will be established and foreign investors are waiting for opportunities to work here. These are tough times. We must all work hard and fast. No time to waste.
Many Egyptians seem to respond favorably to el-Sisi's austerity measures of the past 3 months.
We know it's hard but inevitable. There must be patience as long as the country is on the right track.
The new president adopted reforms that his predecessors avoided in fear of public outrage. The public accepted these measures now, waiting for el-Sisi to deliver on a promise that there will be major improvements in 2 years' time. Yasser Hakim for CCTV, Cairo.
Let's get you some more details now live from Cairo. Abdel Nabi Mohammed is an advisor to Egypt's finance minister. He's live from the Egyptian capital tonight. Thank you very much for your time this evening, sir. President el-Sisi did cut some fuel subsidies earlier this year, raising prices by as much as 80% on some commodities. Is there room for more subsidy cuts in fuel?
I think there is no fuel subsidy in this budget to cut budget 14-15, and I think the price of the fuel will be as the same with no change. And I think President Abdel Fattah el-Sisi knows that any change in the fuel price will be so dangerous. Increase the fuel prices will make a bad things in the poor people. It make their lives is so hard, and I think that's not thing to do.
Would it be fair, therefore, to say, Mr. Mohammed, that the public anger at the initial subsidy cuts have limited the room President el-Sisi has to implement more economic reforms elsewhere, not just in fuel subsidies?
I don't know what angry some people talk about it. I think the Egyptian people gave the President Abdel Fattah el-Sisi their trust, and that trust will make him so strong when he decided to go in his strategy to reform. But I think he have to do some special programs to poor people. President Sisi has a lot of Egyptian trust, and that will be so good to make his strong decisions in economic reforms.
Indeed. Mr. Morsi, however, was fairly wary of cutting a deal with the IMF in order to fix Egypt's public finances. What are the odds that Mr. el-Sisi will also not cut a deal with the IMF?
It is a different issue. I think Dr. Morsi was in a bad situation to make a agreement with IMF. But so I want to say something, everybody know it. IMF couldn't do any agreement with any country with no parliament. And I think that negotiation with the IMF will be earlier after the election of the parliament. But people in Egypt don't like to make agreement with IMF that days. Also, I think the government will not be happy with that decision, which which have no things to do with Egyptian people.
Indeed. Final question to you, Mr. Mohammed. Unemployment is at about 13.4%. That remains a key problem for Egypt as a whole. But beyond large-scale infrastructure projects like the expansion of the canal, what else can Mr. El-Sisi do to reduce unemployment over the next 4 years?
Of course, I am with you. It is a big number of unemployment. It's 13.5. It's a very dangerous number. But I think the huge companies such as the Suez Canal or development of the Sinai or development of West Desert, a lot of project has established in Egypt, and I think that will be decrease this number. But I am with you, that's a dangerous number. If President Sisi didn't make something with that issue, it will be so dangerous to all Egypt, not only to Egyptian economic, but I think it's all in Egypt.
Indeed, we'll have to leave it there. But thank you so much for your input, Mr. Abdel Nabi Mohammed. They're live in Cairo. He's an advisor to Egypt's finance minister. Let's take it to West Africa now, where Ecobank Nigeria has signed a deal for a $20 million line of credit with the Brazilian Development Bank, the BNDES. The facility will address the special funding needs of customers and non-customers of Ecobank who import goods from the Latin American country. The National Bank for Economic and Social Development, as it's known in English, has a net worth of about $27.4 billion. Ecobank Nigeria says this deal was driven by demands from importers who need competitive financing to buy goods from Brazil. Now, the areas of interest for this import facility include agricultural products, engineering and construction equipment, oil and gas, industrial goods and electronics, among others. Quick run through commodity prices here for you. Yesterday, of course, we did see crude oil prices dropping under $100 a barrel. They're still well under that level. Today, slight recovery, however, 93.2 is the relevant number for you on that board. When we come back, we'll be looking at the business of diving for algae in Morocco. Divers want better returns from this trade. Why is that? We'll tell you in the next couple of minutes. Welcome back. The Moroccan government has introduced measures to curb over-harvesting of algae at the coast. Now, this, of course, is a lucrative business, but excessive harvesting over the years has led to a decline of the available algae to harvest. On Grassroots tonight, you hear from divers who say they're not getting good returns for the work they do and what they want their government to do about it.
About 20 meters underwater, these divers are looking for red gold in the swamps off the Moroccan coast. Algae is used in the food and cosmetics industries.
Early in the year, we would harvest up to 500 kilograms of algae per day, and at the end of the year, it's no more than 200 or 300 kilograms. Algae is increasingly rare.
The red algae is used to manufacture agar, a vegetable gelatin. It sells for around 30 cents a kilo, a price set by the Moroccan government. Divers say they are not making much profit from the work.
The divers do not reap the benefits of this work. It's the resellers who buy from us and export the algae who profit.
Despite being the world's largest producer, Morocco does not have a single processing plant. The vast majority of the algae is exported for production abroad.
99% of our production is for export. Unfortunately, Morocco imports products containing agar, but it is not processed here. We do not use it to make food products that contain it. It is the Japanese and the Europeans who know the benefits.
The plant is facing its own set of challenges. It's threatened by overharvesting. In 2009, around 14,000 tons of algae were collected. The government is now trying to limit that amount to some 6,000 tons.
It was harvested very chaotically. No control, no quotas, no restrictions, no shutdown periods. Anyone during the season could work in algae. At least today there are restrictions.
The government has now introduced measures to curb overharvesting of the plant. As a result, red algae is slowly returning to the Moroccan coast. Jane Kale, CCTV.
Let's make a quick run now through currencies. The interesting story of the day comes from the South African rand, down at one point to 10.93 against the American dollar, well over 1%. It's a precipitous fall, this. South African Reserve Bank data indicating that household spending has actually grown at a far slower pace in the second quarter of the year. In the first, it was up by 2.7%. In the second, by 1.8%. That's a fourth straight quarter of decline in consumer spending growth for a variety of reasons, household debt levels being one. We'll keep tabs on these numbers and what they mean for South African enterprises in a lot more detail right here for you. Now, just before we go, here's what's coming up on tomorrow's show. We'll be looking at the Kenyan retail store Uchumi. It shut down one of its biggest outlets in Uganda's capital, Kampala, after suffering a drop in profit last year. What's the link between the two? We'll be examining that. And later on, oil and gas exploration and production programs in West African states are under increasing risk. Why? One word: Ebola. We'll be looking at that in a lot more detail from West Africa and elsewhere on the planet later on in tomorrow's show. But that's it for this edition of Global Business. Send your feedback on the program to globalbusinessafrica@cctv.com, wherever you are online, Facebook, Twitter, you name it. We're there. We'll see you in 23 hours. Thank you for watching. I'm Ramanya.